But of course, this being the Goldmoney Asian Rapid, we are learning so much about gold, investment in gold. And right now, we're going to be joined by an expert on this team, Ned Naylor-Leyland. He is the head of, and listen to this, everyone, head of gold and silver at the Jupiter Asset Management. Thank you for joining us, Ned.
Thank you so much. I'm excited to be here with you all.
Oh, we're so excited to have you. I know actually you were taking a look at the ending of the first or this game here. What did you think about watching chess like that?
Yeah, you know what? Actually, I watched the semi-finals as well, just as preparation to come and talk to you today.
Cool.
And I got quite sucked in, actually. I must say, I have no technical background, but I found it quite compelling.
Cool. We love to hear that. And I love your title, Head of Gold and Silver. I mean, what do you do in your job?
Well, look, so what it is gold and silver is a bit of an esoteric subject. It's actually for nerds, which may be some crossover here with chess.
Definitely.
But it has its moment, it has its moment where people become very interested. And Jupiter brought myself and my team in to run a fund a year ago. And that's just the name for the head of the desk, I suppose, really.
All right. And it's been so interesting throughout this tournament to learn more about gold. And of course, everyone in the entire world knows about gold. It has such a huge status, such an immense status. Why, historically, does it have this status?
Well, I mean, it's a big subject, Kaya. The answer is that there's a sort of element of religious mysticism to it. And then there's also huge amounts of history whereby gold is operated as, I'm hoping I'll be saying things that other people haven't said to you, by the way, but basically gold has always operated as the risk-free instrument of the financial system, even right back into antiquity. That's why it doesn't have a credit rating. So, that I suppose informs the financial and the socioeconomic perspective of gold. It's been the thing that humans have always lent towards over and above the state and I suppose financial institutions.
Yeah, and when it comes to investing in gold, why did you get interested in that? Why is that an interesting subject?
I got interested in it because I found out about some dodgy stuff that was going on in the system. So basically, if you approach the financial services industry as a skeptic rather than a believer, fairly quickly you'll come across gold and silver and you start to understand the situation isn't quite as it appears. So I suppose that's the answer. Is I came at the industry with a skeptical viewpoint and wanted to understand genuine risk rather than what was presented to me in textbooks. And, what you learn is that gold is the constant. And there's a very boring book, which someone maybe on this might be interested in reading, called The Golden Constant, which shows you that gold is the thing that actually measures goods and services, not euros or dollars or sterling. So that's credit money, and that degrades in your hands, as we all know. So, my background came from a skeptical viewpoint.
Yeah, and Ned, what advice do you have for people like me and some of our viewers maybe who are thinking of finding out more about gold?
Yeah.
Well, look, I think the first thing to do is to frame it the right way. So frame it as a risk-free form of cash. So what it is, physical gold is a way of saying, look, I'd rather have that proportion of my assets parked in the corner of the room, not participating. Now, that might not sound very exciting, but that's very different than everything else. So, normal forms of cash I'm going to pitch to you are really degrading on you, and people intuitively know that. Whereas gold on its own is a way of saying, look, I want the proportion of my assets to buy the same stuff in 10 years and 20 years, to be able to have that. I suppose it's sort of real saving rather than ersatz saving, which is what most people do.
And so is the price of gold always constant?
So I'm going to say to you it is, although, of course, optically it's not. When you look at the screens or you look at Turn on Bloomberg, whatever it is, you'll see that gold has a price. But the truth of it is it doesn't. Gold is an element, and it's actually pricing the way in which sterling, dollars and euros are falling rather than the other way around. It's on the screen we look at the gold price going up or down. but actually it's not. It's measuring goods and services and government issued credit money. But of course, that's one of the great tricks that's been sold to people, is that that's not the case. Did that make sense?
Yeah. And actually, I've been reading actually this morning that the price for gold has been dropping a lot lately. I mean, is there a little bit of pessimism in the market for gold right now?
So no. What I'm going to say to you is it's exactly what I just touched on. So what that is short term dollars, particularly, which is what people tend to look at, rather than, for instance, if you're in the Eurozone, you should be thinking about it in euros. But they look at the dollar gold price. What's happened is the dollar gold price has come down. But actually, in reality, what's happened is that forward dollars, so the market's view of dollars held in the future, is slightly more bullish now than it was a few weeks ago. And the reason for that is because people are talking up the likelihood of interest rate hikes, which makes dollars held forward look slightly less bad than they did a few weeks ago. So in fact, gold's not doing anything. It's just the market's perception of holding credit money forwards is what's changing. Gold is just gold. It will always just be gold.
And we learned a few days ago, also from another guest we had on the subject, that it doesn't take too much money to invest in gold. You don't have to be super rich. You don't have to start out with a lot. It takes quite little money to start investing. So if you're, starting to look at investing your money in something, is actually gold maybe the best idea?
Well, I mean, our mutual friend will be upset for me for saying this, but I also think silver has a role to play there because it's lower price point, and really they're the same thing. But my initial comment would be, depending where you are, you can buy a quarter of an ounce of a gold coin. So a UK sovereign is a quarter of an ounce. That's quite a low entry point. But I think one of the key things to mention is just to make sure that wherever you're buying physical gold, that you're clear whether or not it carries capital gains tax. Because in most countries, there is a sovereign coin of your country, which actually is legally a form of money and can't be taxed. So you need to make sure that you do bear these factors in mind, when you're thinking about it as the risk-free instrument. It's a savings vehicle, it's legally money, but there are nuances, of course, within that.
All right. So finally, Ned, the winner that we will get to know in this tournament tomorrow will take home $30,000. If you were that winner, would you take a little of that money and invest it in gold right now?
Well, absolutely. I think, in fact, the right way to answer that question is to say that you should be doing it kind of all the time. It's like when people say you should try and save some of your income. So, whatever proportion that might be, whether it's 2 or 5% or whatever it is, absolutely, that's good, consistent human behavior. People generally don't do that, by the way. That's kind of good advice that's rarely taken. But I would say that, you thinking about it in that way, which is this is a genuine savings vehicle for the long term, then of course, why not? Okay,
good tip there. We're taking notes. Ned, thank you so much for joining us and teaching us more about gold.
Don't be silly. It's an absolute pleasure, and I look forward to seeing what happens from here in the match.
Perfect. Thank you so much.